as a whole. Unfortunately, the revenue and tax briefings don't really provide the whole picture. We've come to understand that the DLS, the Department of Labor Services, their idea of sound financial policy for the town is that, and I'm quoting, that we strive to generate free cash in an amount equal to 3 to 5% of our annual budget by orchestrating conservative revenue projections and departmental appropriations to produce excess income and departmental turnbacks. And that was a mouthful, but it basically says we're supposed to be exceeding our targets and underutilizing our budget to the effect of 3 to 5% of our budget in turnbacks. So when Brian says, we're meeting targets, we're actually kind of underperforming. Our conversation with John Mangiarotti has left me, more of the image of a duck on the water. Above the water, it's all calm, and below the water, the legs are kind of kicking furiously. So John made it clear that continuing to fund our free cash and keeping it at the DLS's recommended level of between 3 to 5% of annual budget has been a struggle since before the pandemic hit. He has found himself at the end of fiscal years asking departments to spend no more than 98% of their budget in order to provide enough cushion to meet our free cash replenishment efforts. This past fiscal year, we were on course to exceed our revenue projections, and he may have been able to operate at full budget expectations, but the pandemic halted the growth and required freezing of hiring and other operations in order to realize any turnbacks in FY20. So revenue growth and tax collection may, again, technically be on target this year, but that target will not guarantee free cash replenishment. So with this in mind, it would seem unwise to spend down our combined reserves, our reserves, while this uncertainty remains. Also, per the previous year's ALG spreadsheet, the town estimated that it would need $1.1 million from free cash to put towards capital projects in order to balance the FY22 budget. And, we're sitting at a $1.6 million budget shortfall between the town and the school budgets. Now, that being said, Mr. Mangiarotti stated that we often come into the budget season with a gap of this size that needs to be considered and managed. So where does that leave us? Well, from the Board of Selectmen's perspective, and I speak to this from watching Mr. Benson detail this information in their last meeting, we, the Finance Committee, were suggesting to use $2.5 million in free cash by eliminating the 2.5% tax increase. And then, there was going to be another $1.1 million from free cash for capital spending, while also trying to fund a $1.6 million gap in the budget, potentially from free cash. So, the 1.1 million and 1.6 were not in Steve Noon's spreadsheet. And so were not something this committee had considered when making our initial recommendation. So this finally kind of explains the seeming overreaction that Christy and I have experienced from the town and from ALG. We were not all speaking from the same assumptions of meeting turnback requirements through revenue growth and budgeting and starting the budget cycle with kind of an assumed spending out of free cash. From our perspective, until we see and agree upon the budgets, we have no reason to accept or anticipate any use of free cash, despite what was predicted or planned for in the ALG spreadsheet. However, I think we may have some evidence that asking for no tax increase at all this year might result in a complete depletion of free cash, with the risk that we do not replenish enough to stay with the DLS's guidelines of 3 to 5% budget. So our current free cash is $3.75 million, which is 3.6% of the FY21 budgeted ALG spending plan. We also have an additional $2.07 million in our stabilization fund. So these two sources bring us to $5.82 million, or a combined reserve of 5.58% of the budgeted FY21 ALG spending plan. The entirety of our free cash replenishment for use in FY21 came from budget turnbacks when spending and hiring was frozen, not from any excess in revenues. The finance department expressed strong concerns about any spending that would bring our combined reserves below 3%, as this may lead to a lowering of our bond rating, given the uncertainty of our finances going forward due to free cash replenishment trends and the impacts of the pandemic. It's important that we all come to a firm agreement on exactly what our reserve policy should be, so we can then make our budget recommendation based on that understanding. So with all of that said, and hopefully not too swiftly because I do speak fast and I'm happy to repeat numbers, that's, I think, unless Mr. Noon wants to add anything else, I think that basically sums up what I heard, what I understood. And so if Christy's okay with it, we'll.
I do, if it's okay with you, Christy.
Go ahead, and then I'd like to say something.
Well, the proposal was never to use up our free cash. The proposal was to put it on an ALG spreadsheet, which we've done for many, many years, to say we were going to use money from reserves. And then what I presented was about 10 years worth of history that shows we never actually used that money. So I was never intending this to, if you will, take all our reserves out. I was relying on what's always been the case. Now, what is new here is the fact that maybe we don't expect turnbacks to be as good as they have been for the last 10 years, and that could certainly impact the calculation. But my proposal was more of a cash flow one, not talking about the years in the future, but talking about the years in the past. Let's use $2 million from the turnbacks when we did get it and apply it to this year, hopefully then that those reserves would be replenished as they usually are. The second thing we're talking about is DLS, which is Divisional Local Services. It's a branch of the DOR. They've given guidance for years. This is somewhat different guidance than I'd seen before. In the past, we've never really followed it. The ALG spreadsheet at times had $3 million worth of, reserve use on it. But again, it never happened. It never turned out to happen that way. So reserves weren't pulled down. So again, the proposal was more mechanically, we have to put the reserve use on the ALG spreadsheet. It was not the intention to pull down reserves. It was to think this year was going to look a lot like the last 10. So that's where I stand on that. As far as, have we put more than $1 million on an ALG spreadsheet in the past? Yeah, a lot. And sometimes if it was operating, sometimes it was for capital. I don't see any reason why in the future maybe we can't put something on there for taxpayer relief.
Before we dive into Steve's points there, I would like to back up 3 steps, I think, and have Steve and John confirm that what Christine described about the level of turnbacks and the level of reserves actually available is in line. She described things the way that you would agree with, so that we are in fact working from the same basic assumptions.
Yeah, I thought it was a very good presentation. Thank you, Christine. Just to kind of reiterate, again, this is John Mangiarotti, Town Manager. Steve Barrett's here also. But just to reiterate, the free cash use is something that we've been working on since 2018. We try to reduce the amount of reserves that we're using to run the town. I think in the memo that I sent to the Finance Committee, we used we reduced our free cash usage down from 2.6 million in FY16 down to 1.16 million in the current fiscal year. And that was intentional. And a big reason for that is that the reserve replenishment, Mr. Noon referenced the last 10 years and that there's always been a healthy replenishment. And I think that has been the trend for at least 5 of the last 10 years. But if you look at the last 4, the replenishment has been, in FY17, it was 1.1. In FY18, it was just over $1 million. In FY19, it was 1.6, and last year it was 1.4 million. So nowhere near the 2.7 that's anticipated as a way to make this work. I think it was useful having that conversation yesterday, yes. And I'd be happy to have further conversations like that with any of you or all of you. And just to give you a sense of that, the numbers I just read, the reserve replenishment was based on unanticipated excess revenue and unexpended budget. And back in FY17, the excess revenue was 800,000. In 18, it was 770. In 19, it was 700. Now, these are all in thousands. Last year, it was $1,000 only. And so as a result, the amount of turnback we had to force has increased each year. So it was 330 in 17, it was 265 in 18, and then in 19, I think in October of 2018, we came to the ALG table and said, we just talked to the rating agencies, we just talked to DOR, they see a trend in our reserve use that they have concerns with, so we're taking specific measures right now to make sure that our reserves are replenished, even though excess revenues may not be available. And so we had 900,000 turned back in 19, and then last year, the entire reserve replenishment last $1,000 was from an operational turnback, which we forced on our departments, and it was sacrificed by our town departments and the managers that operate these departments. And I think we were able to do it because it was a very strange year for many reasons, and we were able to cut spending, and a lot of spending we were doing was on CARES anyways, on COVID anyways, and that helped a little bit. And then the position freeze, we were able to do it for 6 to 7 months with only a few impacts, but I think, as I mentioned, and as Christine mentioned, we've started to bring these positions back because we are starting to see some impacts. So, and I detailed some other information in the memo that I hope you all reviewed, and I'm happy to answer any questions about that.
So one thing I would also just like to have clarified, because it was a shift in my thinking around this. The free cash, I was taught that reserves are free cash plus stabilization fund, but it is my understanding now that the reserves that are really available for use that won't push us into a position that endangers our bond rating for the borrowing we have coming up is really maintaining that 3%. We need to stay above that 3% number if it's free cash as total town budget, or the 5%. We don't want to go below the 3% of free cash as a percentage of total town budget. Is that correct?
That's the target that we're working within. It's not an official town policy of the Board of Selectmen, but it's good. It's a good best practice that we're trying to meet.
Thank you. Christine, do you want to take over calling on people, or would you like me to?
Oh, feel free. Go ahead.
All right, Jason.
Thank you very much. I have a couple of questions, just because I'd like to make sure that we are all using the exact same terms and that we're comparing everything in an apples to apples comparison. By the way, if I sound a little funny, I'm coming off of having a crown replaced today, and the Novocain's wearing off, so I feel like I'm chewing on my tongue. First and foremost, in the homework that was sent out by Christine for us to do some reading earlier today, from the DLS, the definition of free cash, I would just like to draw everyone's attention to the last paragraph, and in particular the last line. The same rules apply to the DLS's certification of retained earnings, which is the enterprise fund equivalent of free cash. So, at the risk of doing too much algebra with my middle schoolers, doesn't the distributive property hold here that we should also be incorporating into our definitions of what we have as available for expenditure, fully aware of the fact that there are different rules for enterprise funds. But shouldn't we also be including the $2,231,000 that we have in these enterprise funds as part of the retained earnings and free cash and or reserve, and not a technical definition of the term reserve, when we are talking about what the town has on hand? Or are we to believe that the rating agencies do not take into account a total picture of the town when trying to determine a rating? So that's my first question, and then with your permission, Madam Chair, I have a couple of questions afterwards.
So Steve can back me up if I have this wrong, but the retained earnings from the enterprises are, in a sense, free cash available for use, but only for use in those enterprise funded operations. So we couldn't use the retained earnings in sewer to fund firefighting operations. So
Right.
I don't.
Right, but by that same token, when the rating agencies are trying to get a full financial snapshot of the town, do they or do they not include that's a substantial amount of money, 2.23 million, when trying to determine the health of the town?
They certainly look at that, and I think if there weren't retained earnings, they think they would have questions for us. But the fact that that funding isn't available to support the general operations of the town makes it less critical to how they value or view our financial health in terms of our general operating. So the money is there, and it should be there, but we can't use it for any issues that we run into generally. So it's not helpful in that way.
So by that same token,
Hold on a second, Jason. Steve, did you want to say something there?
Yeah, well, thank you, Madam Chair. All I was going to say was, it's a great question, Jason. When we dealt with the bonding rate agencies over the last couple of decades, they just asked for our general fund, and they, it's a published number, but when we talk reserves, they talk about general fund free cash. And again, as John says, that's primarily because the state only allows you to set up enterprise funds for certain purposes, and those funds stay within those kind of siloed purposes. But kind of to your direct question, when we go at it with the rating agencies, they only ask about the general fund.
okay, well, that shocks me that they only ask about the general fund. I would expect them to also ask about the stabilization fund. So a corollary question to all of this is, if the rating agencies really are only looking at the municipal side, then I believe the number that we should be looking at, and this is going to be purposely rabble-rousing, if we're only going to look at the municipal side, then if you look at the percentage of the municipal budget using only the municipal reserves, we're at 21.89% of our reserves. So clearly that can't be true.
I'm sorry, Jason, can you back up a second? How did you get there?
So, Madam Chair, I forwarded you a spreadsheet about 20 minutes before the meeting. I'd love to throw it up on the screen and go through it, because I believe we need to be very careful about what we count as part of reserves and not.
Hold on, my recollection is that you included in that, and Christine, I'm hoping you can put this up. I forwarded it to you. I'm having computer difficulties. Jason, my understanding is that in that you included my recollection, that you included the enterprise funds.
I sliced it 5 different ways. To make it very clear. If you include only the free cash and stabilization fund and compare it against only the municipal budget, we're still at 15.8%.
Okay, please hold on there. John Mangiarotti or Steve Barrett, could you please help us figure out why that's so different from?
Well, I think generally the funding that we work with in our ALG model, all the revenue comes from taxation, or most of it comes from taxation, which is deposited to the town. We collect in 21, it looks like 89 million. And that's what we're relying on to fund all the things that we have to pay for. We have to pay for our municipal operations. We also have to pay for our assessments for the educational institutions that we're part of, meaning
Okay.
the Regional School District and the Minuteman School District. So if there's a need to fund those things, it would come from our revenues.
Scroll down, please.
I'm sorry, John, one more question because I'm still not, I want to understand Jason's numbers here. He has percentage of the municipal budget, and it looks like he's saying using only free cash in the stabilization fund. By his estimation, that's 15.8%. And the 3% we discussed earlier, is that based on the municipal budget in the DLS guidelines, or is that the total Acton budget, looking at the ALG spreadsheet?
It's based on the bottom line. The
The 109 million?
Well, yeah, in 21, yeah, for 22, just
Yeah.
under, yep.
The 104 million?
Take everyone through the spreadsheet really quickly, Madam Chair.
I just want to make sure one of the problems we ran into in our previous discussion is that, as you rightly pointed out, we're talking about different numbers in different situations.
That's why I'd like to take you through the 5 scenarios, if I may.
Okay, but do you agree that the 15.83% scenario is a different number than what the town is discussing?
Of course.
Okay.
Let me take you through the 5 numbers.
Okay,
Well, the first one there on line 22, percentage of the municipal budget, and I'm using from this current year, the most recently approved at town meeting budget, and only applying free cash and stabilization for 15.8%. I think that's a bullshit number. Furthermore, the percentage of the municipal budget with all of the municipal reserves, including the enterprise funds, makes it look even rosier, 22%. If you take a percentage of the total budget of last year, which came to 104,092, and you only apply all of the municipal reserves, that's at 7.74%. Where the town presented and what Christine presented earlier was a percentage of all of the money that we have to spend using only free cash and stabilization, which comes in at 5.59, which I believe is a completely specious number because it is inappropriate to declare that the total amount of money that we have to spend does not take into account E&D. So if you take a total percent, so the 5th number, which is the only number I believe to be legitimate, if you take a total of a percentage of the total amount of money that we have to spend as a town per year, and you include the Acton share, which I calculated to be 85% of the number of the E&D that was given to me by Mr. Vertolino or Director Vertolino earlier today, and I used his lowest number to be as conservative as possible. Our actual reserves comes in at 10.51% of our total spend, which is healthily above the 3 to 5% that is being recommended to us by the DLS. So reason why I wanted to put this in spreadsheet form is I'd like to make absolutely sure we are all agreeing on the same set of facts. Where if you scroll up a little bit, so there, 17 and 18. Line 17 and 18, I pulled directly from the town warrant for the town meeting, the late town meeting that was held June 30th of this year and is operating for this current year fiscal budget. Everything else, line 11 came from Director Vertolino today. All of the lines above that came from the presentation or from the letter from Manager Mangiarotti. And everyone is, of course, welcome to check Excel and their ability to do math for the percentages down below. I would like to make sure that we are in agreement that these are the numbers we should be talking about.
I wholeheartedly agree with that sentiment. Christine, could you please take us out of screen share mode? This brings up an issue that I have had for a long time that I would like us to discuss before we get further into this. I am of the opposite opinion of Jason. I do not believe that E&D should be included in our considerations of reserves because it is not funding available to the town of Acton at the end of the day to pay our bills. It is important money to know that it is there to help the school have their bills and for us to negotiate with them both to ensure that they are being financially sound as an entity and to have encourage them to use to offset assessments to the towns. But it is not something at the end of the day that can be used to pay the total Acton budgets they come due. So I'm curious to hear other people's opinions about including E&D in our discussions. Steve?
Well, I can argue both sides of this one if you like, but what you say, Christy, is quite correct. On the other hand, the biggest part of our budget is the Acton Boxborough assessment, which has its own reserve against it, which E&D by state regulation can go up to 5%. I understand we're a little lower than that at the moment. So then when we say we need to have 3 or 5% of our budget, what's our budget? To some extent, if we say we need 3% of the 109 million, then we're double counting, because 60 some million of it already has a 5% or 4% reserve against it. On the other hand, you're absolutely right when you say that's not available. The Acton Board of Selectmen can't make the school committee use that money. So it can be argued both ways. I think an absolute coming up with a percentage, which is where I'd like this discussion to go, is kind of contingent on making sure we're on apples to apples. 3% of the municipal budget, is what? Million two? We got that. 3% of the whole budget is a lot more than that. It's closer to 4, so. And how much do we count the schools E&D as part of what we should have on hand calculation?
Any other opinions wanting to weigh in on this?
One last question, if I may, ma'am.
Is it related to this specific topic? Because I know you had another.
Yep.
It is on this topic?
Yes.
Okay.
So we were told that we need to make sure to be in this 3 to 5% range according to DLS, because we don't want to get harmed with our AAA rating. Wasn't our AAA rating reaffirmed just a few months ago when you went out for the North Acton Fire Department? And did we receive an official negative guidance letter, or were we put on an official watch list at that time?
So, as I mentioned, in 2018, October, we met with the rating agencies. They raised a concern. They reaffirmed it at that time as well, but they flagged it as a concern, and I think they put it in the rating opinion. If not, Steve, you can verify that. But in what we most recently got looked at again, I think we were able to demonstrate turning the trend around a little bit. Steve, do you want to?
Yeah, absolutely, John. Jason, I'd have to check their actual rating document. But again, as John said, John started July of 2018. Within a few months, DLS, the Department of Revenue, called and said that the dashboard that they maintain for cities and towns had a negative trend in reserves, and they wanted us to look at it. Within short order, it was either Moody's called us, and then in the spring we got a call from the other rating agency. So I can check to see if it's in there, but they have expressed that for a AAA town of our size with our spending, that they wanted to see a stronger reserve position from the town. And so that's kind of what I'd say there. And, Madam Chair, I'd agree with you on the earlier discussion about, pulling out the regional E&D from the calc. I also think you got to pull out enterprise funds from the calc, because in terms of true reserves to offset operation of the general fund, we can't use those enterprise fund balances. And even if we could, you'd go within and jeopardize our ability to provide, ALS or BLS ambulance services, or, John Mangiaratti's running a public utility, and public utilities, good heavens, the amount of reserves that might need to be maintained for a public utility. So, that's kind of where I think on that. But I can go and look, Jason. I can try to find the actual rating document to see if they had a formal kind of whack at us on reserves. But I will put that as a to-do.
Yeah, I would love to go through all the details of turnbacks and stuff like that, and maybe I'll write a letter. But for now, what I'd like to hear John talk about is do you have a reserve policy? If so, what is it? And is I understand? I don't believe the Board of Selectmen's ever put one out. But we have, and you probably have one in your at least a working policy in your head, or maybe it's written down. And so, what is it? And what are going to be the guidelines just for this year set? Is it are we limited to 1,150,000 for the reasons that you've stated in terms of protecting the bond rating or whatever? But just I'd like to get an idea of what's in your head for a reserve policy.
So thank you for inquiring about what's in my head. I appreciate that. So in the budgets that I presented in the December of 2018, December of 2019, and December of 2020, I alluded to the DLS recommended reserve levels of 3 to 5% as to where we were shooting to maintain. Short of a policy approved by the board, that will continue to be my approach, is to try to make sure that however we recommend and fund our budgets, that we maintain reserves in that amount. And, you know, as I said, the placeholder put in the ALG plan that was in the warrant in June and is what we're currently looking at as of October has a placeholder amount of 1.15, and that amount will be reviewed and scrutinized and discussed extensively over the next 3 months or so to determine where it should end up. My goal has been to have that number go down, which we've achieved in terms of how much we're appropriating from reserves to fund operations. As I said, it went from 2.6 down to 1.1. I'd love to stay in that range. I would not want to go much higher unless we had specific circumstances, which at this point we don't have. But so I guess to answer your question, 3 to 5% is where I'd like to be, and I look forward to any guidance or direction from the Board of Selectmen and the Finance Committee in terms of what your thoughts are.
So if I can reiterate, what you're saying is you want to see 3 to 5%. I'll call a follow-up question: 3 to 5% of what?
Oh, sorry, keep going. Sorry.
And you want to see the usage, the planned usage, to be around 1.15 billion. Currently, that's what you want to see.
Well, I think that free cash can provide capacity for us. We have significant capital needs that we're working to identify and document and present later this year. And maybe not this year, but in future years, I would like to look to free cash as an opportunity to fund some of these capital needs. So I wouldn't want to spend any more than we needed to get through next year.
Do you have any plans for a stabilization fund? Because when we set that up a few years ago, it did have a kind of a capital tag to it. The first thing we did was buy land with it, but yeah, what's the plan for the stabilization?
So we're still developing the budget. We haven't done that yet. We're not in the middle yet. We're sort of in the first half of that process. So there's really a lot of things that we haven't sorted out. So I haven't made particular decisions on what I'll be recommending to the board later this year. Things like that will certainly be considered if we need to.
Okay. All right. So thank you for the indulgence, Madam Chair, but I think it's important we try and get to speaking about what the policy implications are.
I just realized I didn't answer your initial question to me.
Oh yeah.
Of what number? And the 3 to 5% is what I believe should be the number that we need to be responsible for paying for every year. And as I said, we have to fund our operations, and part of the other things we need to fund our assessments. And we have a great relationship with the district, but they don't have to use any E&D if they don't want to. They've been very cooperative, and I hope that that continues. But we can't assume that for forever. And we also have the Minuteman District, which is a much smaller district, obviously, but it's still another one that we have to pay out of our revenues that are available. So in terms of what we need to have in reserve, I want to have 3 to 5% of all the things we need to pay through our general revenues.
Yeah, and that's fine, John. I'm throwing in my own view here. I'm happy to work with the number of 1.15 million in planned reserve use for the year. How wouldn't? Let's just say if it's 1.15 when we want to do taxpayer relief, I hope it's still 1.15 when the town comes up with a bunch of capital money or an operating deficit that they want to fund. I think if that's the number, we should try and stick with it, whatever the reason that we're going to spend it.
Again, it's a placeholder, and I'm not making a commitment to that right now. I would love that to be all we need to spend to provide services next year, but it's not my authority to decide tonight what we're spending in reserves. It's just a placeholder, and it's a target.
All I'm trying to say, John, is that I asked you what was in your head, and you told me what was in your head, and that's fine. It's a perfectly good number. And I think it's a sustainable number. So I would like to see us, as best possible, stick to it.
Anyone else have any? Christine?
I think just to circle back a little on the idea of, E&D and town reserves, while we absolutely should consider them in how we present our point of view and where we would like to see monies come out from as far as budgeting is concerned, I think that's perfectly appropriate. But if we're talking about, our reserve policy, I think we have to separate the two. The school has worked hard recently to bring its reserves close to that 5% mark because the bonding agencies do look for them as a school district to have at least 5%, and yet Massachusetts law gives them a top of 5%. So they're kind of stuck with needing that number in their reserves, regardless of what the town has. The town is stuck with its own need in order to maintain its bond rating. And neither one of the bond agencies are looking at the other pot of money. And so, yes, we should consider the pots of money for some types of discussion. But as far as our reserve policy specifically is concerned, we should simply be looking at free cash and stabilization, as I understand it.
Mike has gone high tech and raised his hand. Mike, what
Oh
would
my
you like to
God.
say?
Yeah, I just wanted to say this has been a very interesting conversation, and it's and I think it was stimulated by, I guess, FinCom sort of stirring the pot a bit about asking about the use of well, not really the use of reserves, but really the consideration of not increasing our tax rate this year. But I just think has been very informative and helpful, and good communications on both sides. And it's probably a conversation we should be having every year with all of us together. So I think it was mission accomplished. Everyone seems to be happy with the results, and FinCom got sort of an explanation of a deep dive into the numbers, which was good. So thanks, John and Steve and his crew. It was very helpful.
Christine?
I'm happy with the result of the discussion in that I know more now, but I liked it better when I thought we were in a much stronger financial situation than I think we might be.
Agreed. I don't think we have fully addressed Jason's idea, and I'd certainly like to know the rest of the committee's thinking about what level we want to discuss reserves at. Jason thinks that we should include E&D in that number. Please correct me, Jason, if I'm misrepresenting you.
I believe not only should we include E&D, but we should also include the enterprise accounts. I fully understand that the money in there is not available for the general fund purposes, but it is all money that has been taken through taxation and is sitting in the town coffers. We're at 10.5% of our annual spend. That's my position.
Other opinions? Dave, did you appear? Yes. I can't hear you.
I think the sewer fund, for example, I believe that's funded by the sewer fees directly, and some of these individual enterprise funds, you know, they have their own revenue source associated with them. I see Jason's point, but you know, and this sounds really cumbersome, but it's worth almost having a policy for each fund and how much reserves each fund should have. I know that's kind of sounds crazy in the context of all this, but some of them can get very large and unwieldy, and you know, you do question what are they for. And the sewer, maybe it's for large capital projects going forward, etc. But they do have their own needs among them. So just that was my only comment. Is just the enterprise funds I generally see as a little more separate and specific to a specific revenue source.
I'm gonna thank you, Dave. I'm gonna just say one thing. John Peterson has nicely raised his hand. John, we do not at this point in our discussion take comments from the public. Apologies for that. Those comments can be taken at the earliest citizens' concerns time, but we don't in our deliberations here. Mr. Noon.
Yeah, as far as the enterprise funds go, and I don't know the answer to this, and maybe John or Steve can look into it. Is there a way to set a limit on how much can be held in reserve in an enterprise fund, and can that money then, if it exceeds it, flow back into the general fund's free cash? I know famously a few years ago we dissolved an enterprise fund that we had on nursing, so I know that they can go away. What I don't know is there any mechanism for setting a maximum amount of retained earnings, and if it goes over that, have it flow back into free cash?
I've never seen that, Steve. I mean, that's a great question. I've never seen a limit or a reserve policy that called for something to happen. As Dave Wellinghoff said, a lot of these, like the sewer enterprise fund has sewer O&M rates in their embedments. So I guess if you had something like that, where if you get over a certain level, I guess you'd return it to the ratepayers in that case, in that enterprise fund case. But
yeah, I think
in practice, I've never seen it.
But some of them, don't have, like the transfer station and things like that. Some of them, have some income. Well, they all have, I think, some income coming in, but some of them are supported by general tax dollars as well. So, yeah, I don't know the answer, Steve. You're more than happy to research it, but I think it'd be, as I think it was Doug Tyndall years ago, referred to little puddles of money everywhere, and not really a way to add it all up. I think it would be good to the point Jason's making, to see what our overall position is, even if it means we can't actually get at some of the money. It'd be nice to know what the position is.
Roland.
I agree with Dave's point of view on the enterprise funds, but also feel that, if there was ones that are subsidized by the general fund, then those ones should be included. I know parking lot receipts. Steve Barrett sent me the information today that is $20,990 through October. Now I don't know if that's from July 1 or if that's from January 1. Maybe Steve can comment on that. And where is that in projection of what we were assuming at the beginning of this fiscal year? We assumed where that was going to come in. Now, unless all of a sudden they can get this shot that Pfizer said and get it ramped up to the billions and given to everybody in the country by January, I don't see that revenue from that we've had in the past from the parking lots coming back anytime soon. Given that, I mean, a lot of people now are, if they have to go into Boston, they're not taking the train, they're driving it, just based on not wanting to be in a confined space with a bunch of other people that are not related to them or what have you. So those are my questions for that. So
Roland, the $20,000 number I gave you for parking revenue, that's from July 1 on. And to your second point, and I'd have to get you the exact number, but a lot of our parking revenue was dried up. Clearly 50 or 60% down. So, that's, as you see, the lots are empty. So, anyways, that's about all I can tell you right now. We can get you some more information on that, but yeah, that's the commuter parking lot. That's not an enterprise fund, technically, but yeah, that fund is not having a good 6 months.
So, Madam Chair, if you don't mind, if I can follow-up question.
Certainly.
So that money that's generated from the parking lot, from my understanding, is supposed to be taking care of the lighting of the parking lot and the maintenance of the parking lot and all that. Does that money just flow from the parking lot fund into the general fund? Because I remember years ago we had so much money built up we had to spend it, and we ended up buying a police cruiser or something with it.
Those funds are separate and discrete by law, so we have those funds kind of sequestered in its own fund. I think, in full disclosure, I think that did happen years ago. We put a police cruiser through there, and I think we shouldn't have, and we had to kind of back that out. But that was probably 8 to 10 years ago. But those funds are in its own, munis fund, and it does not. Those funds wouldn't revert to the general fund. They have their own, kind of placeholder. So that's kind of how that one works.
Okay, thank you.
Christine.
Christy, do you want me to pop up our current reserve policy so we can look at it? And
That would be lovely. I kind of wish it made sense to name different types of reserves because we have a variety of different things that can be included in them, and just have them have certain different colors or something, so it was easy to differentiate what we're talking about when. I agree with Jason's idea of keeping an eye on the enterprise funds, but in my mind, they are effectively separate businesses because their monies are so earmarked that I don't think it's fair to use it in our broader discussion of reserves level in preparation for a rainy day or in being used to purchase one-time capital items per our recommendation. Or I've lost the other one. Okay, so what we have here is our current or our as of last year reserve policy. Now here again, we don't actually define what reserves is. As I understood it, believed that this was to be free cash plus stabilization. Does that sound right to people? I see Steve nodding, and unfortunately everyone else isn't on my screen, so.
Well,
Roland are. Does anyone have any?
Mike's opinion would matter because he goes all the way back on this one too, but everybody else, they inherited part of this thing.
I was around for this as well, and I do still think that E&D at least needs to be addressed. It's money that's already been taken from taxpayer with a specific purpose. It's the largest portion of our assessment per year. I think it's inappropriate to ignore it as part of the reserves.
Christine.
But do we, so I hear what you're saying, Jason, and I agree as far as budget discussions go. And I think maybe there's a way to include language here that addresses E&D while still treating these as separate entities. And I think
That's why we have two different metrics, right? This is what we were trying to avoid 5 years ago when we first carved this out. That's why we have one threshold that's being measured against a municipal number and one metric that's being measured against a total against the total Acton spend. One included it and one didn't, in the attempts of trying to set an upper and a lower bound.
it was not my understanding that that threshold number referred to both types of reserves. I defer to Steve and Mike on that one as far as the intent of the original policy.
The original policy, the intent was to have both stabilization and free cash.
But not include E&D?
I don't believe we, originally, I don't believe we included the E&D in the policy. My memory could be wrong for the reason that we're the Acton Finance Committee, and we really shouldn't dictate to the Acton Box Road School Committee what their policy should be. And there was another reason why we didn't do it. That's the only one that comes immediately to mind. And that I think we meant to only talk about the municipal reserves, and I'm not even sure at the time whether we had a stabilization fund or not, or how big it was, but we were smart enough to know that there was both stabilization and free cash, and if we used the term reserves, we meant them all.
We did not have a stabilization fund at the time. That came in 2 years later.
Yeah.
So we are, as I'm hearing right now, with the exception of Jason, saying that reserves for this policy specifically is free cash and stabilization fund. I'd like to go through the group and see where people fall on that, because, well, I don't think this is the most interesting discussion to have. I think it's vital for us in our ongoing deliberations to have that. Roland, what do you think? Whether reserves in our policy, specifically with the lower and upper threshold, should be defined as free cash plus stabilization fund? Or should E&D be included in one or both of those?
Well, if you're going to include stabilization, then why wouldn't you include E&D?
So we have no control over how E&D is used.
No, I know we don't have any control over it, but when we're setting a threshold, if you set a threshold for the total budget, which would include E&D, right? So that's how I kind of look at it.
Could you rephrase that? I didn't.
So when you're looking at a total budget, you're looking at, on the school side, you're looking at E&D. Because they always have some part of E&D in their budget. So that's where I think E&D would be included. So if you're going to include it'd be part of the upper threshold. If you're including stabilization reserves on the municipal side, you should be including E&D on the school side, even though we can't dictate how it's used. It still should be included for the sake of discussion, for the sake of policy. So you don't want that E&D to end up being some year down the road and being $50 million all of a sudden.
It can't be. Their E&D is captive.
I understand. I mean, just you know, you don't want it to be too large a number. So I think we should have that included in there, but I'm open either way.
Right. Christine?
So if I understand everything correctly, the purpose of any reserve policy is the financial health of the town, pertaining to how we make sure we've buffered enough to pay our bills, how the Department of Labor Services views a healthy town, how we maintain our bond rating. And if we're meeting those three goals, then we would not be able to include E&D because they don't look at that number at all. So if that's not the goal of our reserve policy, then I don't know what the goal of our reserve policy is.
Responses? I figured out how to see everyone now.
I think part and parcel of the health of the town is making sure that we are responsive to the conditions on the ground. I believe that considering the state of unemployment and the difficulty that's been brought to the town, continuing to proceed with a 3.75% increase in total.
Jason, hold on a second. We're not talking tax increases right now. We are.
You asked me what the purpose of a reserve policy was.
Okay, go ahead.
And if I believe that the purpose of the reserve policy is to maintain the health of the fiscal health of the town, it has to be taken in toto. I believe that when deciding what level of taxation we're at, you need to look at all the buckets of money, all the Doug Tyndall pools of money, and realize when we're overtaxed.
Should we therefore be including Minuteman's, our portion of Minuteman's E&D?
Sure. Let's include the what, $30,000 of Minuteman's E&D. It's our portion. Sure. Why not? It's mice nuts, but sure, let's do it.
Christine, and then I'm going to let Isha and Adam speak.
So I'm not sure that our reserve policy is the end all be all of every discussion regarding how we spend funding and taxes in this town. And setting this reserve policy specific to the municipal budget and how it's, considered by DLS doesn't hamstring us as far as how we decide to go into an ALG meeting to argue over which buckets of money certain spending should come out of. I think we're trying to define apples and we can still have fruit salad over here. I think all of the other buckets are fruit salad, and I really want to understand apples at the moment. So that's just my take on this.
Isha.
Yeah, I mean, I see the points that everyone is making here. I'm still kind of, I guess, trying to understand why we have percentages of vastly different numbers for the lower and upper threshold. To my mind, if we establish thresholds, it should be different percentages of a single variable, not different variables, So whatever that is, but that was the only comment I wanted to make. I do think that if there are parts of money that are not within our control, then it's a little bit difficult to assign those to our threshold values, because you can then make whatever decision you want to make, but if they're not within your control, how is that even relevant? It's somewhat pointless to my mind.
Thank you. Adam?
I think, what really is the bottom line is what the rating agencies need, correct? And our opinions are our opinions, but we absolutely have to meet what the rating agencies need. I'm still a little confused about whether or not the expenses from these enterprise funds are included in the budget, which is then the calculation for the reserve that we need, but we're not allowed to count the enterprise budget's reserves as part of our reserves. And for that same reason, the E&D for the school, those types of items, I would want some much more specific clarity on how all of those are taken into the expense side of the equation and how all of those reserves are taken or excluded from the reserve side of the equation. Because I do agree with Jason, it sounds to me like we're double counting some things here, but it's an irrelevant argument if those items are needed or necessary for the bond rating.
Mr. Barrett, please help us out here. I believe that E&D has no impact on our bond rating. Is that the case?
Correct. The regional school districts, E&D, would not impact our bond rating. Correct.
I mean, whether they have good or bad. And enterprise funds, my understanding is that short of them sometimes getting general fund revenue from the general fund, they get their own revenue and they pay their own expenses.
Correct. The rating agencies have only been concerned with our general fund reserve level.
Does that answer your questions, Adam?
Yeah, I believe so. So that sounds pretty clear that the enterprise funds expense side is not included in what we need to hold reserves for.
Yes. And what about your E&D? Does that answer your question?
Yes. Yes. Thank you.
To put a little context around that specifically, a lot of money, more than usual, was spent out of E&D last year. And there is some money specifically in the school's budget, however loosely it's in there right now. We were told it would be to replenish E&D because they have fallen down below the level that they have as an internal policy for being healthy. I'm hearing no resolution. So for now, I say we table this on what we think reserves are.
Can I throw out something?
Please do.
Okay. So what I'm going to throw out is a working policy for this year. It's clearly been well thought out. And what I'm going to say is, and hopefully the staff and board of selectmen can sign on to this, but I want to say that our free cash and stabilization fund should not fall below 3% of total spending and assessments. So that's the floor. I also want to say that our budgeted reserve use for this coming budget year should not exceed the most recent prior year's actual turnback. Meaning we won't get ahead of ourselves by planning to use more than the last time we replenished.
Actual turnback also being known as reserve replenishment.
Yeah.
What do people think?
Well, there's one more.
I'm sorry. Apologies.
And this isn't, I don't even know if it can be calculated, but the third item would be that we set as a maximum some percentage of our total free cash, stabilization fund, enterprise retained earnings, and the E&Ds as a percent of all the costs that are included against those budgets. So add up the general fund, all the enterprise funds, the assessments, and calculate a maximum percentage. Like I said, I don't know what that is, but first I'd like to see the number added up.
I would love to find out what that is. So if you can work on that, it would be.
So even if we don't make it part of the policy, we really want to know what that number is.
Christine, I see you, but I'm going to check below the fold. I see no hands raised down there. Christine.
So I like 1 and 2, and I like tracking number 3. But the bottom line is the school went ahead and created a stabilization fund last year, and if we If they throw a couple more $1 million into that stabilization fund, then do we have to reduce the town reserves as balance? And since we have no control over that, I have some concern over locking ourselves in on that. But I do think it is definitely something that we should be on top of and be aware of and bring to every discussion regarding our process as far as the budget goes.
Well, and like I said, I hesitate to even suggest something I don't even know the calculation of, but I think to make sure we don't get into a habit of overtaxing, we need some sort of upper limit. So I'm happy to defer on that if people like 1 and 2. We can study the third item once we actually get the calculation and see what it looks like, and see if we want to make a recommendation on that. But I went on the lower number instead of saying 4 or 5, because we are applying it to $109 million instead of 38. But I have to recognize the fact that there are reserves against that school number as well.
Yeah. Okay, feelings about what Steve has proposed. I'm seeing overwhelming support in that no one has raised their hands. Jason.
The only comment I wanted to make is that I find it very interesting that when we first set out a reserve policy 5 years ago, Steve and I were two of the people who demanded there be a lower bound because there were more fiscally hawkish people on the committee who wanted to drive it to 0. And we were two of the ones asking to make sure that we at least put in a floor so it not go to 0. And now I find it very telling that we are two of the people saying we've got to pay attention to an upper bound, and that quite possibly, quite probably, we have found ourselves in an overtaxed position. It is amazing how different 5 years can do.
Okay. Christine, did you have something? No. Are we comfortable with Steve's proposal are we happy with Steve's proposal as a new definition of the upper and lower thresholds of the reserve policy?
I request that we see it in writing and review it for next time.
Sounds wonderful. Thank you, Mike. Steve?
All right, here.
Maybe we could noodle some upper limit.
Yeah. Yes, Steve Barrett, if you could maybe put some numbers together in terms of what's the total budgets of the enterprise and retained earnings, we could maybe get some sense of what that number looks like.
I think it would also be important to have an upper threshold based on a number that is more easily comprehended.
Yeah.
Jason, did you have a point there? No? Okay. I presume on this point we also agree generally with minimizing the use of reserves and E&D. Just since we're on this slide. Checking. Okay. And as will come up in our further discussions, I think especially around this year with reserve use is maintaining it for unforeseen capital needs and emergencies. I'm going to say that the Crickets agrees with those points that we have there. All right. We can kind of keep beating away at this, or we can decide that that was a good start for where we want to be with reserves. Any opinions about it? Do we want to get further into reserve usage for this year, or call it a night on that topic? Okay, Roland.
You could call it a night on that topic for tonight, but I mean, I think we're going to have some kind of more discussion with it especially once Steve gets his language to be put there, how it should be, and then we can discuss at that point to see where we need to be.
I think that sounds good. I think reserve use is going to be a very interesting topic for us this year specifically. Things are definitely different than they have been in the last few years.
Yeah,
Okay.
they're probably the most trying, I think, in some ways since I've been on the committee.
I believe it.
Over 5 years. So
Yeah, our most recent meeting, I remember being told that things don't get interesting in ALG until around February or March. It has already started being
Some years
interesting.
are worse than others.
Yeah.
My
But I think we're making.
My analogy is the ALG is like an NBA game. You play a lot, and then the whole thing's decided in the last 2 minutes.
But I think Mike Major summed it up well. It's good that we're having these discussions now and are able to realize some points of miscommunication. And it's allowing us to do good clarification here. Thank you on that. Is there anything else we'd like to talk about regarding the point of view?
Not on my front for this evening.
Okay, unless there's something else within the tax and reserve use discussion people want to have right now or the point of view, I think we can move on to committee business.
When's the next ALG meeting?
I apologize. I cannot access that information right now. Do you have it, Christine? It is, I'm sorry. I believe it is November 19th. Someday my phone will let me get in here. Yes, November 19th, 8:30 a.m. I don't think there will be the same degree of passion in this meeting, but I welcome anyone to come watch it. We have no minutes to review at this point in time. I have given a ALG meeting update. Does anyone else have any? So Hannah has unfortunately had to leave. She says that Mr. Benson's Board of Selectmen review covered the topics well from the most recent Board of Selectmen meeting. Anyone else? Christine, I'm laughing because you and Jason simultaneously.
I know I was delaying. I've spoken a lot in this meeting, and I'm about to speak a little bit more. As far as the school committee goes, Larry Dory, the high school principal, has announced he'll be retiring at the end of this school year. So the school will be looking to replace Mr. Dory. Currently, there are, as far as COVID goes, 3 cases at the high school, 1 at the junior high, 2 at McCarthytown, 1 Douglas, and 2 district-wide not attached to a school. And that sounds like a lot all at once, but 4 were from one family and 2 from another. And at this point, it doesn't look that there's any community spread. Dave Vertolino gave his report at the last school committee meeting, and the school is seeing a small revenue deficit for the first quarter. It's not apparently uncommon for school districts, but it's uncommon for AB. They've historically budgeted very conservatively. On the plus side, the House Ways and Means Committee slightly increased like the transportation aid we might be able to expect from their previous budget, but we won't realize any of that till June. Any reimbursements the school district receives on their FY20 COVID related expenditures, that money would be counted towards FY21 revenue. So to date, they've received $55,000 in FEMA reimbursements, but I'm sure there's more to come. There's nothing surprising in their expenses for now, but it's hard to predict where those will end. The school is at this point working hard to try to minimize loss to revolving fund balances like the school lunch and community ed and all day K and athletics. They are projecting $3.5 million in certified E&D on a FY21 budget of $97 million. So that puts them at about 3.71%. Their guideline is to aim for 4%, and of course their ceiling is 5%. They recognize that their trend has been to use more E&D to plug budget gaps over the last few years. Their goal for this year is to back off from that, but they stress that there are a lot of unknowns about this school year. Honestly, they don't even know if they'll all be in school tomorrow on a given day. So between E&D, circuit breaker, and the capital stabilization, their combined reserves are a 7.7% of budget. And the school is receiving, in total for what they've applied for and can expect to receive about $4.4 million in reimbursements from state and federal sources as far as CARES and FEMA and other monies they've had access to. So then just quickly, other things that Dave talked about as far as potential significant budget drivers, they know they've got fixed costs for debt and pension and OPEB, and cost escalators like COLA and insurance, but unknown, again, are the continued financial impacts of COVID, staffing changes, which would be enrollment-based. Enrollment is down this year like statewide, probably nationwide, and it looks like enrollment is going to take a couple of years to settle. They're just not sure, how many will come back to full-time school once that's available. So staffing will have to modulate to meet those needs. Program budgets are their likeliest areas of cuts for potential cuts. There may be impacts of having to add SPED staffing if they go full online, as the COVID numbers in the state continue to climb. There's some to be determined as far as state aid, federal relief, possibly impacted by, delayed election results. So that's where they are as far as what their budget drivers going forward will be. And then, for COVID variables, it matters if the buildings are occupied. Obviously, they saved money at the end of last year by not having to run the schools, the electricity, and the systems. Well, right now, they're running basically on the cold days, their heaters are going full blast to offset the fact that the windows are open. And the HVAC system is circulating the air 24/7. So there's going to be cost impacts to that. They are looking, as Christy said, at Hepa filters for the classrooms. Actually, they're looking at them, as far as I understand, for all classrooms, and that won't necessarily mean windows will stay closed all day. They will likely open and close still, even as things get colder. Though they have already had some issues with classrooms getting down in that 40 to 50 degree range, which is tough for learning, I imagine. And then they're trying to find ways to add value on asynchronous days, to add more support to the remote classrooms. They're monitoring staffing challenges around sick days, as well as, needing to quarantine. And this is just regular sick days. Obviously the pool of subs is lower, and they're trying to mitigate subs moving from school to school, as they normally would feel comfortable doing. They are investigating testing programs, especially as numbers rise. The least expensive programs at this point are bottom range $1 million. So they're still kind of looking into sewage testing, which is less expensive and allows them to have a baseline. As Dave pointed out, the cheapest thing that the district could do budgetary wise is go full remote. But it's been proven that that's just not a great model for the schools. So they're trying desperately to balance these two factors. So expect volatility as far as what the school is able to do and what they're able to budget. There's so many unknowns, and they're expensive unknowns potentially. And then the last thing I want to say is I didn't get to watch the entirety of the Board of Selectmen meeting, and I pretty sure I read John's update, but what I heard the town manager Mangiarotti say is that they are looking to submit a 10-year capital plan And I'm pretty excited about that. It's difficult enough to get plans beyond 5 years. So the fact that they're working on a 10-year plan is fantastic, and we look forward to seeing it. I'm out.
Roland.
I have a question for Christine. I don't know if you can answer this or not. Did David mention anything about the busing? That because you're having a lot less kids on it. My son's route is like 18 stops, something ridiculous. It goes way up to Avalon and then works its way back down here and does a neighborhood next to ours and ours and stops in Patriots Hill instead of doing the neighborhoods in our neighborhood, Patriots Hill, and the one next to it, and combined it more. So the first day of school, he was 45 minutes late and got better lately. It's on time. They have it down better. And then there's one of his friends. She's on a bus only has 8 stops total for the whole route. I'm talking the whole route. So I'm wondering how the impact of busing this year is adding to that, because obviously, as you said, the windows have to be open in the school. They have to be open on the bus, which means they're blasting the heat at 100%, which obviously uses more fuel because it's you're generating from the engine, obviously, but you're still at high speed, etc. So I was wondering if they happen to mention busing at all or had any statistics on that as well.
Not that I saw, though. I'll be happy to go back and see if I can find that information. They are busing only, half of the hybrid students who signed up to be bused. So there's less buses, but less people per bus. So I'm not exactly sure how many buses they're running out of what they typically run and what those fuel costs have been. But I'll see if I can get an answer from Dave on that.
If you can. That's fine. Because I know that there was a memo sent out by David Crane that if you sign up the kid to be on the bus, make sure they're on the bus. You can't sign up for the bus and say, you don't do it.
Right. Well, the interesting thing will be when we get funding from the state, it's always based on the previous year's usage. So I'm not sure how they'll calculate it in these times when usage is going to be completely different and off from our typical run once we're back to normal. But I'll find out what I can.
Yes. Thank you.
You get to go next, Steve. 1 second. Just for those of you who don't have students in the school, the district, I think, is doing a good job in minimizing isolation relative to the COVID cases that appear. There have been a number that have popped up, and they've managed to not close a whole school or a whole wing. They've managed to really target and figure out the smallest necessary group to get kids quarantined off, not to interrupt their learning where everyone else is so much. So I've been impressed with how they're handling that, and it seems to be working well so far. Steve.
Yeah, Christine, sorry to ask you another question, but do we know the timeline of the school's budget preparation? Is there, typically superintendent would get something preliminary out in the first part of December, but town meeting may be later. So do we have a schedule?
I don't know. I'll find that out as well. I know that the budget subcommittee has been meeting. And in fact,
it was actually in the packet.
Is it? Okay. Well,
I didn't look at it, but it's there.
So in the meeting, actually, a member of the Boxborough Finance Committee came on and said, "Hey, I'm looking at your schedule. So you're right, there is one, Christy, but it's wrong, because if they were using that schedule, they were not going to necessarily get a budget to Boxborough in time for their typical budget Saturday finance review." So
okay, I'm sorry, to clarify, they are actually voting on a budget calendar at their next meeting.
There we go. Okay. So at their next meeting, they'll vote on a budget calendar, and I'll bring that back to the committee.
And do we know, given the number of unknowns, how are they going to, is there any talk about how they're going to present this in terms of, are we presenting a number, a range of numbers, worst case, best case? Is there any talk about how to budget in the case of uncertainty, which typically municipal and schools don't do, but I certainly did a lot in business.
So I believe, if I understand correctly, and I'll get verification on this, that the most expensive thing the school can do is continue to run the hybrid model at this time. There's never been a talk of increasing the days in school. I can't even see that happening. And so if they were to budget for the remainder of the school year as if they were going to continue on hybrid, and things changed and they had to go remote, it is likely that any expenses going remote would be offset by savings. So I would plan on one budget, but I'll check with if we would like, and if we want to challenge her, Amy Krishnamurthy is here and might have a better answer to that question. Or you can wait till next week.
She's the one who just told us about.
Oh, okay.
But
No, it was more a curiosity. I don't know need to know the answer to that.
Okay. All right.
They are talking about having, rather than budget Saturday, it will be a budget evening on the theory that no one can sit through 4 hours of additional Zoom.
And same question to John, if he's still here, or Steve. I can see Steve still here. Do you have a schedule for the town manager's budget?
And we kept our internal process relatively on track.
Okay.
So we're hoping to have some preliminary information in December, but we're not going to be prepared to present a budget recommendation until we know exactly when town meeting will be.
Okay.
Okay, and Jason.
I was going to do another liaison report.
Please, yes.
Okay. The school building committee. Turns out that when we did our test boring for ledge, we were off by 5 feet. So unfortunately, we found more ledge as we're trying to get closer towards building the foundation for the new school, which does, of course, have a negative impact on the overall budget. What the actual budgetary impact is going to be is still in flux. They're trying to make any last minute changes. They're hoping for unexpected upside because apparently the landscape for bids is actually favorable to owners at this time, as construction companies and subcontractors in particular are looking for work. The big thing as of the last meeting, and unfortunately I don't have an update. It was supposed to happen this week, but as of the last meeting, which was last week, they were trying to decide whether they were going to drill the remaining ledge out or if they were going to have to resort to blasting, which is also why the final cost of this unexpected ledge is not something that I can share at this time because we're still trying to figure it out. They have admitted that this project has had more change orders than is normally expected, and they attribute it all to ledge, how it impacted both the foundation that we're trying to do now and the original septic field. But everyone remains optimistic and hopeful that when we get to the guaranteed maximum price, which, as I mentioned earlier in the meeting, is out for final markup and validation amongst the three main groups that review and agree before guaranteed maximum price is set in stone. That is out for markup, and we should have that answer by the second school building committee meeting in December. And of course, I will absolutely report that number to the committee when it comes out. That is all I have at this time.
Thank you. Anyone else? Mr. Mangiarotti, I cannot find it on my calendar right now. Could you please tell me when December's ALG meeting is? Do you have easy access to that information?
Maybe.
December 17th, I think.
December 17th? Thank you. The reason it matters is because we need to decide whether to have a second FinCom meeting in November. ALG is meeting next Thursday. And, excuse me, I'm in completely the wrong place. That is on the 19th. We could have, our meeting would typically be the following Tuesday, the 24th. That is the week of Thanksgiving, but no one is, I presume, traveling. So the question is, do we want to meet in order to have a catch up after that ALG, or would we like to push off to our to meeting the second week of December, which would still allow us to have time to meet before the next ALG meeting? Feelings? Jason?
Best to meet when the data is fresh.
Right? Christine?
Yeah, I'd like to finalize our reserve policy and see if we can maybe even have a solid POV at that point.
Right? Sounds like we're heading towards meeting in 2 weeks.
I'm not going anywhere.
Yeah, sadly, I'm not either. Okay, that means our next meeting is on Tuesday, November 24th, and we will plan on continuing our reserve conversation in that time. Stephen, please type up what you have for us.
Okay.
Review. Thank you so much. Isha, do you have a motion for us?
Yes, I motion that we adjourn this meeting.
Second.
Wonderful. All right, Adam,
Aye.
Isha,
Aye.
Christine,
Aye.
and Steve,
Aye.
Jason,
Aye.
Roland,
Aye.
Dave,
Aye.
Mike,
Aye.
and Christy. I say aye. Thank you, everyone. Good night.
Thank you.
Good night, everyone.